Okay, so let's start. You know that I use the roller trading hours chart a lot, and basically what the chart that we have right now here in front of us is the 7 hours chart on Nasdaq futures contract. And why I like to use this chart for my trading is basically because displays the daily range, but for roller trading hours only. So if you change your chart to the regular or electronic trading hours on your daily chart, you are not going to see many gaps that are still open or are here on this chart. Okay, so I like to use both charts to have information about gaps, basically, because I consider myself a gap trader. I use gaps for framing my profiles in the intraday for my trades, and I use gaps to to gauge have a directional bias on a high time frames, because I will explain it a little bit more, and I will ask Josh if have like a, because it's not my mother language, the English. Sometimes I struggle to explain a little bit of the things. So I need, maybe I will need a little bit of help to.
I'd be happy to help you, Hermano. And everybody
Yes.
knows this. I've said this on other live streams. For anybody that speaks two different languages, I give you a tremendous amount of respect. There's a lot of people in life that only speak one language, and just being able to communicate with individuals from around the world in their own, native language is very honorable. And again, if you have any questions about, just communications, I'm happy to help translate the best I can. If anybody speaks Spanish in the audience, then again, we'd be happy to also invite up those people in a respectful manner to translate anything that needs to be translated.
Thank you so much. So, okay. Uh, what I do with the gaps, or the gaps, I have like a hierarchy for the gaps. Basically, I look for high time frame gaps that are formed during the opening of a high time frame candle to frame where I am relative to the opening of the monthly or quarterly candle, and I use the quadrants between these openings as fundamental areas to draw price. Also, okay, so for example, this is a monthly chart here on the regular trading hours chart. Okay, so basically, what I like to do is this. Okay, so I have my drawings here, and I draw every monthly opening uh, from regular trading hours. I extend to price action. So I have this July new month opening gap. I have August new month opening gap, September, and every month. So when we don't have gaps above the marketplace or below the marketplace, I use then the close in proximity new week opening gap as a point of reference for my analysis. So above here, we don't have any new month opening gap, but if you see between this 12th July Friday here and the Monday, we create this gap. So I will consider this gap as a reference point for my high time frame perspective, if you want to call it like this. And from here, what I do is basically I display the quadrants between the closest one opening in proximity, and this helps me to identify if I am premium or in discount relative to the previous monthly opening. Okay, so you can see how on regular trading hours here, we are basically moving from monthly gap openings and using the event horizons. Once you leave one, this is some basic, very really simple what I do. Why I do like this for framing my bias? Because if you think for example, if you move to the weekly chart and you are trying to annotating your chart an order block, a weekly order block, you are basically annotating a new week opening gap in your chart. Okay, so if you are trying to annotate a BC on a weekly chart, you are annotating the event horizon between two new weeks opening gaps. It's the same. So the closing price of a candle is a really important point of reference for the market, and you will see this on the regular trading hours chart. So, but not every candle closing. This is something that I say a lot with the people that I talk, is that you can fractalize an infinite combination of power of three due to the fractal nature of price. So you can say that every closing price is important. No, these closings and openings are important because are formed during a specific time window, that is a weekly, that is when the market is closed, and when and a monthly candle or a quarterly candle. So you can say this. You can't use this logic for example, I don't know, 12 hours and try to do this. It's not going to be so precise because the fair value.
I think we lost your audio, Armando. Someone give me a 1 in the chat if we lost audio or if it's just me. Armando, we lost audio. I don't know if you can hear me. Audio check, 1 2 1 2. Audio check. Oh goodness, he hasn't even started giving out the sauce in these market makers. Oh goodness.
Yes.
Armando, we're back. We're back. All right, sorry, we're back. We're back.
Yes. Can you hear me?
Yes. They're just trying to mess with us initially, though. We'll get it through. It's only been 7 minutes.
Yeah. So yes. So it's a really simple way and really simple approach to having your chart and know these levels, because you really don't need to annotate every volume imbalance or the 50% of a week or I don't know, every PDR rate that is in your chart. I basically can frame the bias for my trading just considering this. And you can see how we are using these levels on a regular basis in trading. So I do this for the regular trading hours chart, and I do this also for the electronic trading hours chart. Okay. And I use the settlement price here because if you, the settlement toggle on, because if you don't use it, the chart is basically printing the candles consecutive to the previous close. And so you don't see like the difference between the previous settlement price close and today's open. So I like to use like this because I can see clearly, for example, here, the difference between 31 July and the 1st of August. Here's a clear difference, and we are tapping here beautifully into this level here. So if you can compare here, we didn't reach on regular trading hours.
Hermano, we lost your audio again. You started dropping sauce. This is already gonna happen. Come on now. Hermano, we're losing you. You're back.
Okay, I don't know why it's happening this, but yes. So you can compare here the regular trading hours chart on 7 hours. That's displaying basically the daily range, and the settlement price on daily chart on electronic trading hours. So we reach beautifully here the new week opening gap of this week, and we are closing below these two gaps here. And we tap exactly into the event horizon that is the 50% right here. Beautiful. To the tick perfectly. And now we are trading inside between this range of gaps, of monthly gaps. I personally, I would like to take this low and reach the 50% of this gap. This is what I would like to see. But now we are trading inside of this candle after taking this short-term low here. And we can move a little bit higher from here. I would like to see like we have now. I will use now this chart. Okay, to frame my trade based on what I'm expecting. Okay, so this is the Dynamic Regular Trading Hours Pro tool that I like a lot. So what I do with this tool is basically framing my trades, premium of discount relative to the previous daily close on regular trading hours. Okay, so why is this so important for me? Because we are trading a stock index market. So everything that is happening outside of this time range, I really don't consider at all in just like a PDRAs and the only thing that I'm looking for pre-market hours is basically from the liquidity from the overnight. So what I'm trying to do or I'm looking is what is the market doing during the time that the stock market was closed. If we are moving higher or lower, I'm basically trying to fade the overnight traders based on the using this gap to frame if I am bullish, if I am in premium or in discount relative to the previous day close. So, okay, because imagine that the market is closing, I don't know, like on this day, and we gap higher and we leave this gap open, and you are taking, I don't know, some kind of buy side, and you are looking for higher prices, but what the market is going to do is to rebalance the gap that it was open. So once I tap into the 50% at least of the regular trading hours gap, then I am willing to look for a long if I see it in confluence with the structure that the market is presenting and the time element that I'm considering. And I'm a macro trader. I try to position myself always inside of a macro because this allows me to have I don't like big stop loss. So I like 15, 10 points, 20 points is like the most of my stop loss. So this is how I use it. So basically the tool displays the candles that were formed during the pre-market hours and where we are relative to the previous settlement price on the chart. Standard deviations, I use it to anticipate reversals or key levels at these specific points. So I have two specific profiles that I look for on my trading. So it's like the classic AMD pattern that I'm expecting, like a consolidation during electronic trading hours, and we run the liquidity from electronic trading hours, and I use a PD array from the previous regular trading hours session to look for the order pairing. Could be a fair value for 15-minute chart. Many times it's like my favorite time frame, and could be an order block, a breaker block, but only PD arrays from this chart. So look, for example, today, we tap into this buy side liquidity, but I am considering this candle right here. I'm not considering any PD array from here. Okay, so I don't trust PD arrays from this chart, because from my back testing, this is like a, I don't know, it's a way to engineer liquidity from the regular trading hours. So I don't trust any PD array that was formed during the electronic trading hours or overnight hours, basically. But what I want is being able to see if I have a buy side liquidity or a sell side liquidity, or what were the traders were doing during the time window. Okay, so the same for here. If I am expecting a reversal or a kind of a protraction here inside of this range, these standard deviations, I will look for if I have a PD array that can help me to find support inside of this chart. Okay, so we have this BC that was created during the market on close on Thursday. Okay, and we are trading basically between these two regular trading hours PD arrays, as you can see. And we have the confluence of these previous regular trading hours gap from Friday. Okay, so now also the tool displays that the gaps that are still open above or below the marketplace. So you can see the percentage of the gap that was rebalanced, and the percentage that the gap is open. So now above the marketplace, we can see how clearly we have these relative equal highs from previous overnight session. So this is too clean for me as a draw. I would like to see this, but I'm expecting lower prices. So I would like to run some kind of buy side before moving lower. And this helps me to anticipate if I am correct relative to the previous, I don't know, premium discount. So now another thing that I consider always is the first question that I ask myself every day is where I am relative to the monthly opening, where I am relative to the high time frame gaps that I told you here. This is the first question. I am premium or discount relative on these gaps, okay? Because these gaps are going to draw price to them. These are magnets for price. So if I am trading above the event horizon between these two price elements, time-based elements, I'm expecting at least to come back at this here. And I have the confluence. Let's put this gap here. Okay, do you see how we respect beautifully with body this gap, and nobody sees these gaps on just this chart? You see? Perfect. So above this gap, we have buy side liquidity from here. Beautiful. We have these buy side relative equal highs at the 50% of this new month opening gap. So I would like to draw price to these levels. I don't know if we are going to reach this open gap. We could, because we are anticipating volatility today. But if I am bearish, I would like to see at least one portion of the gap open. I'm not expecting to close to fully rebalance to the gap. So now we have from this Monday open standard deviations, and now we see how the 4 standard deviation is aligned perfectly with the lower quadrant of this regular trading hours gap. Okay, so this is a key level or area for look for maybe if we push a little bit higher and then continue to move lower to take the sell stops, or it could be the other way.
I
Take
got a good question for you, Hermano. So
Yes.
when we're in, let's say, a higher time frame like gap like that, right? Like, because right now we have two higher time frame gaps that you would use like above you, right? So
Yes.
are we favoring, and this might be a question again, I'm not sure if you necessarily have the answer to it, but it's like, do you favor running overnight liquidity more than leaving a higher time frame gap open or like rebalanced, kind of? I don't know if that's a good question, because like right now I see that yes, we have those relative equal highs there, but if the gap has been rebalanced, then do we necessarily want to see those highs get ran out? That's kind of like what my internal thought process is. So I guess my question to you is like, what is the hierarchy on that basis? Is it overnight liquidity, overnight session liquidity, or is it maintaining a rebalanced and or redelivered higher time frame gap? And again, if you don't know
Okay.
the answer to the question, I'm not trying to put you on the spot. I'm just curious, just as an analyst.
No, it's fine. It's totally fine. Well, depends of the profile that you are trading, because we are not trading conditions right now. So when you are trading expanding on or moving clean to a high time frame level, you are not going to see many times that the buy side or sell side being pushed. The market will leave those highs for later. But when I am trading or when we are trading in a range, I'm anticipating like running this kind of buy stops. And like today, we are trading basically inside of Thursday range. So I would like to see that price will move inside of these candles, and we have that buy side aligned inside of uh, those ranges. So yes, I would like to see that run today.
So in a
But we
consolidation profile, I guess just to reiterate or confirm, you're saying in a consolidation profile, you're going to favor the overnight session liquidity to be ran, but if we're in, let's say, a higher time frame trending environment, then you want to see those gaps just be redelivered and then left alone. Is that correct?
yes, yes, that's correct.
Yeah, I think that's a lot of clarity right there for anybody that's taking notes, because that's a small light bulb moment for me.
Like this, for example. So you are not going to anticipate to run this lows here, because we are really close to these monthly gaps, and just look how we open and we move aggressively, and you are not anticipating to retrace to here, because we are leaving this gap. I don't know. I told you, and this becomes a balanced price range. This specific gap. So
Yeah, those are my favorite, Hermano. We talked about that. Those are like the brick wall for anybody that's been in our Escape Discord for quite some time. We've talked about this, where it's like if you have one gap on, let's say on one day, and then you have another gap on another day that's in that same range, like that's an algorithmic balanced price range or an island reversal. It's the way that you look at it, right? So
yes, exactly.
when you see price close below a balanced price range, like you kind of see on what happens on, last Thursday, the moment you get that retest of that balanced price range, that CE is going to act like it's literally like an algorithmic reference point before price is going to just start spooling towards one direction. And then again, if CE is held after maintaining the break, then you have a very strong algorithmic confluence to say, hey, listen, I'm bearish until the CE is broken on that regard. Is that correct?
That's correct. Yes. Yes, that's totally correct. So, yes. So another way that I use this tool is, this is something that I do, and I like to do a lot, to compare the three assets, the three average here, to anticipate which one is the stronger or the weakest, the strongest or the weakest one. So how do I do it? Basically, I applied like the Six Sister concept from ICT. That is that this can be sometimes requires a little bit of chart time in here, because requires experience to anticipate this, and you don't get confused in an SMT or a delayed delivery. This is better than the way to call it. Six Sister is because the asset is delaying the delivery. Price basically is moving. You can see slower, but it's not slower at all. Just it's delaying the delivery, and you can get confused and say this is an SMT, but it's not an SMT at all. And the way I can anticipate this is to see which asset is rebalancing the first one, the consequent encroachment of the gap. So I have my alarms, and when I see, for example, on this day, Dow retrace exactly perfectly to the 50% of this regular trading hours gap, that is fair value. I will talk about this. So price move lower, and we take this sell side liquidity right here. You see? So for me, when I see that Dow is leaving this portion of the gap open, but not Nasdaq and ES rebalanced completely the gap, I am anticipating like this will be the cleanest asset, because it's not willing to come back and stay inside of the gap. So, but this is giving me like a bearish confirmation for the day, and I am trying to short because I'm looking for the cleanest asset for here. Okay, so you can compare how price is behaving in the 3 average to see if you can anticipate which one is the strongest. The one that leave the portion open is the one that is not going to make the lower low. So it's going to, you're anticipating an SMT. This is an SMT anticipating tool that I like. So we can see here. Sorry, this is
Measuring the relative strength and weakness utilizing gap theory is absolutely such a gem. And again, if you guys don't necessarily like using a try box like this where it's like looking at multiple charts, always be aware that you can set alerts on the RTH gap indicator, and you can get alerts for when your correlated pairs as well as the pairs that you're trading fill their gaps. So there's going to be quite a discussion that the engineer can talk about basically when the market opens and how one specific instrument will look to attack the CE of the gap with more aggression than another asset, and that's going to give you tremendous insights on the remainder of the 9:30 session.
Yes. So yes, and helps you to, for example, on this day on ES, we didn't. This is open at all. We didn't tap, not a single tick. The price just open and move lower. So this is, and Nasdaq, we just move a little bit above here. We can see it, and on this day, we fully rebalance this gap on Dow. Okay, but yes, the standard deviation, how are they? But no, it's basically what you are doing. You are projecting to the buy side and the sell side the sides of the gap. The quadrants are the standard deviations projections from the regular trading, and helps me to anticipate these key levels, because you are measuring time-based elements in your chart, and helps you to anticipate the formation of the daily power of 3 candle, but on regular trading hours. Instead of measuring the manipulation leg on a measured move, you are measuring a time-based element in your chart. And I like this a lot, because it's not subjective at all. You are not trying to which leg are you going to measure. you are automatically displaying in your chart algorithmic, or I don't know how to say it, but fractal projections of this time-based element in your chart. And I found many times confluence of these levels with my analysis, and very precise. They are really precise.
Yeah, I want to talk a little bit about this because this is one of my favorite portions of the tool, and also, again, probably Toodegrees as well. When you see these deviations get hit at a specific macro at a time of day that you know that the market's going to be spooling, these projections can lead to a very, very nice move in price. And I don't necessarily just want to tell you guys, hey, listen, look at this deviation or look at this deviation, right? Because then you guys just like rob yourself of your own discoveries of what you want to see in your charts, right? So
Right.
it's really important that you guys just again look at what price is doing based off of historical price action and understand how you can look to be prepared in the future. And you'll see that because these gaps are algorithmically delivered, their ranges are going to be extremely important. And the deviations from these ranges, again, are something that you just want to be paying attention to. So when they're in a macro and they're at SMT and they hit a deviation, you guys want to be paying attention, okay? In a very clear way.
Yes, and I use these tools, these deviations, but on a different way on my regular trading hours chart. This is something that I've been studying, and uh, with a friend of mine here in the community, and we are developing like a complete framework to anticipate and use these standard deviations. But I will not I will not give you like the code. I don't know how to say. I will not talk about it completely because it's not complete. But what you are doing basically on regular trading hours is measuring the projection of specific gaps to anticipate key levels on price, and works really well. But when this is complete, my study and backtesting about this, I will share with you how I've been using it, because I've been using it for months. But yes, so basically these deviations are really important for me, okay, because our time-based projections of price. Uh, so let's continue. Okay. So why is so important the gap? I see many people asking me why it's so important the regulatory gap. Okay. So imagine that the market is closed here on Thursday. Okay. This was the last price action. And settlement, this is the settlement price closing. And we are opening higher than this. Oh, forget about electronic trading now. So you are opening in premium. This is really key. This was a key for me to really understanding premium and discount, and not from a dealing range. You are not considering premium or discount in your chart from a dealing range. You are considering if you are premium or discount relative to the previous day close on the settlement price on regular trading. Okay, so for me, this is how I see it.
You're muted again.
Oh yeah, we lost you. Oh, I think he was just drawing though. Well, what's going on, Josh? You send some love in the chat, my brother. Engineer, are we still here though?
Yes,
Okay,
I'm
perfect,
here.
perfect.
Can you hear me?
Yes, sir.
Yes. Okay. So, okay, imagine this is a regular trading hours candle here, and you are opening inside of the previous range on regular trading hours. You are opening in discount on this candle. If you measure this candle here, and you are trying to find the equilibrium, that is this. Most of the times, price is not going to tap into this range here. And you are expecting to come back here to move higher. But if you consider that for the market, when you are opening inside of this, we create here a regular trading hours gap. Okay, this is the 9:30 opening of this day here. We open inside, and now we are trading, taking some kind of call stops from the PM session, imagine here, or a VC or another block on the from the previous PM session, and then we start to move higher. So I am using this gap to frame in if I am discount enough in discount, if I'm looking for higher prices on my high time frame candle. This is a way that you can anticipate these kind of profiles on these days. So there is another way to open, that is you are gapping outside of the previous range higher. Okay, so if you are looking for higher prices, you want to see this. You will see this like immediate rebalance on the daily chart on regular trading hours. Okay, but you are gapping in premium relative to this candle. You are anticipating some kind of protraction into this range to continue the move higher. Okay, this is another kind of profile that I like to anticipate. And there is another one that is the breakaway gap. This is the walking the dog for cold brew. This is a profile for when the market opens and start to move. For the first minute of the day, you start moving aggressively. You are anticipating, you are gapping, opening premium, but price is not going to give you that kind of protraction. And this specific day is very frustrating because you want to see some kind of like on this. So the price open and move aggressively to the other side and give you zero opportunity to enter on a 5 minutes, 15 minutes. Maybe on the second chart, you can frame a setup, but you don't see a protraction at all into the previous regular trading gap. And this is fine because when the market is creating these kind of days, helps you to anticipate certain price conditions on this chart. Okay, I use these gaps to measure the strength or the projections that I told you. Okay, so imagine that you are going to consider only on this chart, 7 hours chart, regular trading hours, the gaps that are open are breakaway gaps, because we have different types of gaps on regular trading hours. There is not like just one regular trading hour gap. We have a breakaway gap. We have an exhaustion gap that is formed during when the price is going to change the state of delivery, and we have like the balanced price range gaps also that I talked a little bit before. So
If you
Okay.
can, I think that this is going to be really, really like a big thing though too, because I feel like there's a lot of light bulbs that are going off in the chat right now. Um, can we talk about the 930? Excuse me. Can we talk a little bit more about the 930 just ultimate expansion? Because I just remembered, again, I'm telling a personal story right here. I remember as a new trader, before I even knew about RTH whatsoever, I used to see like the market just absolutely tanking, and I used to be the person like trying to buy that and be like, "Oh, it's not going lower, it's not going lower, that's not." And I used to literally blow accounts, not knowing like why 930 would have such an aggressive move, and then like try to be like, "Oh, like I didn't catch the side that's actually moving. Let me look to go in the other direction." And I just want people to see how dangerous of a mentality that is when you don't have the information that is being displayed here. Okay. And I'm being very vulnerable to tell you guys as a beginning trader when this happened, like this is a very poor decision for somebody that doesn't know what they're doing, right? But now that you guys understand when that type of profile occurs, that should be more exciting to see when you guys can also be a part of that and or stop yourself from being a part of the wrong move. So I think that that's a really, really big point. If we could just talk a little bit more about what type of signatures you would look for during the 930 just ultimate expansion, where there's a very limited protraction into the 930 or RTH gap. That's a huge
So,
gem, and I wonder if we're able to again talk a little bit about that, because these are the times again where people just get very emotional if they don't know why things are occurring. Because when you see a large move, let's say like 200, 300 points, that happens very quickly, you know, if you're not a part of it, that hurts some people's psyche, and there's no one that's, you know, let's say like stopping that unless you have, let's say, 5 years of experience. And until you have that screen time where you can desensitize yourself to an extremely large move that you're not a part of, that's going to be a debilitating factor for a beginner trader. And because I know you're a very experienced trader, Hermano, and I know that you've studied the RTH gap as it relates to this 930 expansion, I think this is an absolute wonderful opportunity to talk about it. And if anybody is not realizing the magnitude of why this is important, hopefully that this is a small preamble of to basically pay attention right now.
okay. So, sure, of course, this is this is really powerful. What I found about, I don't know if you remember, but ICT talk about when is he's willing to accumulate positions on a long-term trade, like when he was doing like the one shot, one kill trades that was looking for the weekly expansion candle. And I find out that he said something that I found, that he's only to accumulate more position on the market on close, on the last trading hour of the day. And this is something, I'm sorry, this is the questions that I ask myself every day. It's like where I am, okay, and this is all. This is fractal. This question is fractal, okay. Where we are relative to the previous this is the first question, okay, where we are relative to high time frame gaps. Second question is where I am opening, where we are to previous day close. Second question. Third question is what?
Anyone in the chat knows my OCD was just flaring right there. I love you, Hermano.
Yes, I know. Sorry, but okay. Basically, with these questions, I can anticipate the profile that I'm looking. That is, I will try to answer the question that the mock is the market on close. Okay, the guys that are asking me what is the mock, the market on close is basically the last price action of the day. I want to think like this. If market makers or the institutions are not trading during overnight, where is the last time interval that they are able to put orders inside of the market? The last trading hour of the day. So that is a reason why those two specific macros are the most powerful for the regular trading hour session, or basically the daily candle on Nasdaq. The opening, the first 30 minutes of the day, and the last hour of the session. Okay, so if I see that the market on the market on close, we rebalance, we run some kind of intermediate high or low, I know that we are going to trend during overnight hours and we are going to open aggressively if I am anticipating this from a high time frame gap. Okay, so look, this is the 6 sequence. Okay. So when I am anticipating these breakaway gaps, this is like something really interesting and powerful for me to backtest and to find out why some gaps remains open. And basically, when you are changing the state of delivery or you are leaving a high time frame gap, for example, here we take the previous month high here. Okay, this is the monthly high. Okay, we take above this monthly high, this short-term high here, and now we are trading closing after taking or repricing here this new week opening gap, closing below this high here. Look the candle, closing below. So I'm anticipating on this day, on this specific candle, I will drop to lower time frames to see what the market on close did. Okay. I'm not anticipating a breakaway gap here inside of this because I need some high time frame sponsorship level to do that. Okay, this is the key. So it was this day after we tap into this. I will drop to the market on close here on 5 minutes, 15 minutes. This is part of my protocol every day to see what the previous market on close did. Look here closely. I see the signature here. After I'm anticipating a high time frame gap, we leave this portion open. This is a bearish confluence that price is not rebalancing fully rebalance this gap. So the fact that we are leaving this portion of the gap open tells me that the market is weak, if you want to call it like that. And then I will look for the market on close macro here to see if I see an offset accumulation, basically inside of this time window. This is really, you can hold a trade here if you take a trade around this time window when you are anticipating kind of. This is when you are trusting electronic trading hours to move aggressively to the draw liquidity that you have on the high time frame. So when I'm opening on the 9:30, I'm basically anticipating this kind of profiles the next day. Many times you are going to retrace. The more I see the retracement is basically just the upper portion, the lower quadrant of the gap. Okay. So this is a very specific profile. This is a very specific setup that I look for the 9:30 opening. If I am expecting this kind of a scenario, I would prefer to trade from 8:30 to 9 p.m. Sorry, to 8:30 to 9:30. I prefer to position myself if I see some kind of again the same buy side run or change on the state of delivery this time window. So when I'm expecting this, I see that price immediately at the market opens move aggressively, I know that this is going to be a breakaway gap, and I'm not trying to fade the gap. But many times you are not going to see the profile. You can backtest. You can see it by yourself. How many gaps are open on a trend? There are very few gaps, breakaway gaps on this chart. Look. How many breakaway gaps do we have here? This is one. A breakaway gap, I will define it right now because many of you are going to be confused about it. Basically, a breakaway gap is when you are opening outside of the previous candle. That's a breakaway gap. That is what's formed, and leave the gap open. You are opening outside of the previous daily range on regular traders, and the gap remains open. Okay, so this is the closing, opening, breakaway gap. Okay. What is this? This closing price, breakaway gap. Only two breakaway gaps on this leg. Now, this is a breakaway gap. This is a breakaway gap. This is a breakaway gap. This one, okay? So take a look on this. This is how I use these gaps. When I am a bearish trend, I'm expecting to leave this portion of the gaps open because give me confidence. Look, we never reach the 50% of any of these gaps here. 50%, 50%, open, open, open. This is why ICT tells you that when you are bullish, you don't want to feel the consequent encroachment of the gap of you are bearish. This is like a confirmation that you are in a trending market. If you are saying this. Okay, so take a look on this. If you measure the projections of these specific gaps. That's the study that I've been doing. You will find that the projection of these breakaway gaps gives you the ability to anticipate certain range to reverse in price. Okay. So we are measuring this breakaway gap, breakaway gap, breakaway gap, and now we have a range to work. 4, 8, 8, and standard deviations to anticipate a reversal around this area. Okay. And take a look. If you are a really if you like to study, you are look what price is doing. Monthly opening gap, breakaway gap. Monthly opening gap here, leaving another new month opening gap. Do you see how most of these breakaway gaps form after we interact with the monthly openings? Do you see here? Monthly, new month opening gap, breakaway gap. New month opening gap, breakaway gap. New month opening gap here, breakaway gap. So this is something that I found and really interesting. So basically, you are moving lower. You are taking liquidity, and I did a YouTube video explaining that this. I took a long specific on this day here, and the first presentation actually on this imbalance, on a 1 minute imbalance here. And I was anticipating this because we have another high time frame gap. I was on another chart. This is the contract for current contract, but on previous contract. So now we have this.
Armando, you're literally dropping so much sauce right now.
Yes, so I want to make this good for the community.
Let's just get a quick 50-second water break right now. Someone just drop a 1 in the chat right now if they are literally enjoying this right now. I want to hopefully see this whole chat flooded right now so that Hermano can see the amount of people that are really appreciative, you know? So
Thank you.
all right, you guys can chill for a second. Hermano, get a little sip of water. I know you've been going really hard right now. We're basically at the hour mark right now. So I just want to be able to more or less just gather the thoughts right now because we just mentioned a lot. The whole entire 50%, leaving that open, high resistance, all that stuff on, basically the 9:30 opening is an absolute huge gem. I mean, if I was given that knowledge, I really am not even kidding when I say this. If I was given that knowledge, let's say 3 years ago, probably would have saved myself tens of thousands of dollars. So I just want you guys to also understand, like, you got to see the application of also what you're seeing here now, so it's really important. Just recognize that there's a lot of people that care about you within our community, and if they didn't, then we wouldn't be going at this level of detail as well. So it's really appreciative, and I just want to be emphasizing of that. So Hermano, without further ado, I think that was hopefully a little small water break for you, but
that's fine.
But yeah, let's continue because this is just so much sauce right now. And I really hope someone's taking notes right now. I really hope someone's taking notes.
Yes, this will be recorded actually, but you should take notes about this and backtest this by yourself, and you will see the relevance of this chart. Now, to continue, after we reach, I use 8 as a standard deviations because we are moving from a symmetrical. The market is using symmetrical or measured moves. So this is why the 2 and 4 standard deviation works so well. The standard deviations for measuring the 2.5 and you reach 4 standard deviations because you are measuring 1 to 2 and 2 for for 4 and 4 to 8. You are doubling the measure move that you are expecting. So this is the reason why I use this specific number for the deviations of these gaps here. So you are measuring the breakaway gaps, not every gap, only breakaway gaps. And once you reach these levels here, I'm anticipating a reverse. The fact that we reach now the 50% of this gap, and now we are leaving it, we are closing above the consequent encroachment of this breakaway gap. This is a change in the state of delivery from a gap perspective. If you want to call it like that. You are anticipating now higher prices from here. And to confirm this, you should create a breakaway gap to the buy side to anticipate now the bullish trend. Okay, so now you are like invalidating this breakaway gap with a bullish breakaway gap, this bearish move here. Now, and now what do we have here? June open, monthly new month opening gap sponsorship level here. SOS again, right here. You see how we are creating these gaps, these moves. I don't know if you saw that I took like not an insane move. It was the best trading day of my life. Actually, I took the one short about here and was using this specific logic. So now we are creating this this breakaway gap, sorry. And now I'm anticipating to reach what? The breakaway gaps that were open above the marketplace. This is now my drawn liquidity. This is mine now, and I did a call about around here to anticipate this gap here, because I know that how many breakaway gaps do we have on this retracement leg? Not a single one. Not a single one. We don't have breakaway gaps here. So this is a high resistance liquidity move here. When you are trending, you have this kind of behavior on the market. When you don't break away gap, you are creating a high resistance liquidity environment. So now, when we are moving higher, I'm expecting to reach this gap that is open and the new month opening gap above or below or close in proximity to this level here. And now, do you see? Now I will change the color once. I will read this with you. Now, this is not, now it's open. It's rebalanced. Now this is standard. I will use these projections to anticipate from these breakaway gaps an area for a retracement into this expansive price leg. So I have 4 here from this breakaway gap. I have 4 standard deviations and 2.5 standard deviations and 3 around this level. You see? And the new month opening gap. So after we reach this area here, I'm not anticipating to reach this. I want to see, after taking this short-term high here, a retracement. And now what I'm expecting now, this is my draw liquidity, this breakaway gap. It's so simple. Okay? Now, rebalance, and I took this trade here also, here exactly at this low. We are trading into this breakaway gap, and now we are leaving this new month opening gap again. And now we have this that becomes a balanced price range once we leave it. So I'm not anticipating to come back again lower from here. And now if I am bullish, I want to see a breakaway gap form during this bullish move. We change the state of delivery right here, and we reach this monthly opening. You can start to look for higher prices when you leave the 50% of this, basically. But to confirm a strong trend in the market, I would like to see a breakaway gap form. But we create this breakaway gap right here. But this is this is another gap that I found. It's not a breakaway gap. This is a rollover gap.
All right, Armando, we gotta pace it. We gotta pace it. We're going too fast right now. There's a lot of
Yes.
sauce here. There's a lot of sauce here. Oh,
Yes, I will.
goodness.
I
Yeah.
will stop with this rollover gap, but
No, yeah, we just want to be able to have other streams though, so that we can more or less still easily digest the information. It's not that we don't necessarily want to be able to listen. It's just, again, I want to be able to have individuals digest what's being seen over here, as well as not being too overwhelmed, because we all know it's not the last time you're going to be on
yes,
stream.
yes.
But I just
I
want to talk.
just
I want to talk a little bit about what you have on the charts before you kind of just take away too much. But if anyone was watching, it's like when you start to see when prices going through these breakaway gaps, they're always going to also look to return to a higher time frame, like monthly. So it's like when you guys also realize, like, okay, well, we're going to reprice outside of the range to an external, but it's also repricing to an internal. So it's like you
yes,
go from that monthly gap opening, which pretty much sets the high of August, to then trade down to basically the August opening price during September. So really what the engineer is showing you here is that you want to be able to see the higher time frame gaps as they relate to running liquidity and rebalancing inefficiencies. So
yes,
when you see these breakaway gaps be rebalanced and or redelivered, they're going to be rebalanced and redelivered to only two things: higher time frame liquidity and or a higher time frame imbalance. The higher time imbalance in this case, we're talking about monthly gaps. So there's going to be some sauce that's dropped here, and once you guys also see what Toodegrees and the engineer is cooking up for pretty much the end of November, you guys are going to be very amazed. So I just want to also like see if we can dial into a couple of examples of where the new month opening gaps as it relates to this chart more or less set highs and lows of the day, and then if we can just study a couple of those instances of when that occurs so that people can be amazed that they're very likely going to be at macro times. So
sure. Okay.
and if you guys aren't aware, again, you're able to change the colors and, you know, alter pretty much every single one of our tools for customization for your own vision. So that's always something we're advocating our community to be open and sharing as well, because you know one layout may inspire somebody else, and when you kind of see the green gaps, that's more or less for like more illustration purposes, but the engineer also likes to use the white grayish gaps as well. It's just a little bit
Yes,
easier for the eyes. So
yes, exactly.
if you don't mind though, not specifically just yesterday though, if we can go through some like specific back tested examples of like just when the lower time frame charts are interacting with the higher time frame gaps, like that's a great example right there. So it's like let's just again realize what time that's happening, that's occurring inside of a macro, and then you go and see previous deliveries of new month opening gaps. I want to just again highlight the timing aspect of this because we've talked a lot about, price as it relates to gaps, and I know that the gaps are obviously time-based gaps, so we're still talking about time, but as it relates to when pivot points are occurring in the market that are relation to a higher time frame gap, that's what I want to be able to talk about.
Okay, sure. Yes, basically I have now I into this is the settlement gaps. Let me do this. I will make these gaps here. Sync globally, and it will be. Sorry.
So for anyone that didn't just see that, that was pretty cool. You could sync your charts globally. I didn't see that to that degree until today, so I just learned something. That was freaking awesome.
Yes, basically you can make in your object tree. Imagine I have this 7 hours chart here, so and you can choose. I made my draws, and I made these folders, and I have, for example, new month opening gap settlement with the S. So if I want to turn it off, just here, and I have also the regular trading hours gaps. I can turn that off, and if you want to sync globally, you can only sync in layout or completely in every chart that is the same. So instead of copy pasting the levels in your chart, you're basically just syncing levels or hide it if you don't want to see it. And this is really nice. I liked it. Okay.
Now that's really awesome. But yeah,
Yes.
seeing some of these higher time frame gaps, I mean, just set the high and low of the day is just absolutely incredible. I don't know how else to say it.
Sorry. Okay, so the red gaps are basically the new month opening gaps from the settlement chart, and these gray boxes are the new month opening gap from the regular trade. And I have both of those levels in the same chart. So let's see. I don't know which day do you want to see an example, but for example, here we reach the high of the day was formed to this new month opening gap. So imagine that you are fractalizing the range between these key levels and the event horizon. The event horizon is like the threshold, the consequent encroachment. You don't want to price if you are moving from a monthly level to another monthly level. The 50% level is like the last level that you want to see traded. So if you are bearish on this day, you can see that we are trading into the 75% on the both ranges, the settlement price, settlement ranges, and the regular trading hours ranges right here. Okay, so ideally, I want to short above these levels. And where? So the 50%, but because I am bearish, I don't want to feel this 50% because what I said before, if you truly are bearish, ideally you want to see the upper portion of the gap open. Okay, so you are trying to short above the 930 and the upper quadrant, the lower quadrant of the regular trading hours gap, and above the 75% ranges here. So now you have a very tight range here to look for a setup, to look for a short.
So I got a question for you, Hermano. So
Sure.
is it a protocol of your trading that you would want to see a higher time frame gap be traded into and then a lower time frame gap basically remain open for a breakaway in terms of the RTH open of the next day or the same like day that it's tapping? So for instance, let's say on this, it's the overnight, session that taps into the higher time frame gap and then allows the next day to present that breakaway gap. So is it your protocol to notice when the higher time frame hierarchy gap then produces the lower time frame breakaway, and then subsequently is that also what adds to the 930 expansion, as we were talking about with like how cold brew trades it and how we really want to see that just straight out the gate?
Sure. Yes, but basically the protocol is based on the profile. So the profile that it's giving me the overnight hours and what the previous day did and where I am. So sorry, I forgot to give continuity. Where's the rows I did here? Was on this layout. Where are my questions? Well, I don't know. Here we are. Okay. So where we are relative to high time frame. So now
Yep.
where
That's
we
the first
are.
question, and then now we're saying again relative to the previous day close. Perfect. And then MS. It's crazy because that framework's literally just answered my question. If anyone just realized,
That's basically
engineers like Josh, are you even paying attention right now?
yes. Basically, this is the where we are relative to day close. I am anticipating. I am opening below the settlement price of the day after tapping on a high time frame gap. You can anticipate this kind of a scenario. This is basically the profile. So you are opening at 9:30 below the settlement price of the day after reaching a high time frame gap. You are not anticipating balance gap because of the logic of what I told you before above here. Okay, this is basically, and you are call Nick does something similar. He knows I think the 3 p.m. highs on lows or the 3 p.m. Opening. It's basically that we are using a similar way to anticipate this. Yes, 3 p.m. for cash sell, no settlement until 4:15. Yes, I use the last price action, but the 4:15 price, but he used the 3 p.m. So we need that sauce from cold brew, but it sounds similar.
I got a question in the chat I want to annotate here. Dell says, looks like there will be no RTH gap today. Let's pretend it's not a US election day. What's the protocol on a normal day with a small gap? So what's your thoughts when there's a small gap that opens up? Like what's the internal dialogue? And then I think that'd probably be appropriate right now to kind of just end at for theory. We'll open it up for, let's say, like 5 minutes of questions to 10 minutes of questions. And then hopefully we'll be at 9:30 just to monitor maybe the first 30 minutes. And then after that, I feel like we're all going to be saying that it's going to be a great stream. So
Yes, sure.
so yeah, if you could talk about just a small gap, like what internally through your mind are you, what are you telling yourself, right, when there's a small gap?
Okay, where the gap is forming relative to the previous day gap. So if we are opening inside of inside of this gap, I'm anticipating kind of a seek and destroy profile. This is part of my protocol. You can look for the highs of lows above or below these ranges here. So above, you can see clearly that the clean or yes, clean levels without gaps is this range here. This. Here. So the cleans moves are inside of this range. If you are trading between these gaps here, you are going to find chop like this. You see here, this A. because imagine that the gaps are magnets for price. They are struggling to leave that gap. But once we leave that range, move smoothly through this specific price range that is open and has no gaps at all. Okay, so
I got a quick question, if I may, and I don't want to interrupt, but I think there might be a clarifying question, if I may, here. It's like, if there's a small gap that opens up, we still need to be extremely cognizant where that smaller gap is in relation to the higher time frame gap. Because again, if you're in between the two higher time frame gaps and you just have like a smaller one like right here, it's like, it's not that it's not going to be of influence, but like the higher time frames are just going to play ping pong, right?
yeah, right, exactly.
Yeah.
So we are.
So I think that the better question, honestly, if I can clarify, it's like, maybe it's what also is like the profile is going to be dependent on how we also interact with a smaller gap, right? Because if we're now clear from higher time frame gaps and now you just have a smaller gap, then it could be also like a, like as Colbert also knows, like we talked about this many times, like a stacked 930 opening range, and then it's going to be pure expansion. So it's like that occurs also very likely when there's no higher time frame gaps that are just going to be more or less constraining us. So where that smaller gap is placed between the higher time frame gaps, I believe, is a better question and clarification.
Yes, exactly. See, yeah, you're basically trying to anticipate where are you opening. I think that we should. Well, you already know, but it would be really nice to see. We are working on that. I won't say it. This is the settlement price of previous day here. Okay, the last price action of the previous day, and you can anticipate. It's about 8 minutes to open. So basically, the market is gonna be opening inside of the Monday gap. This is a really, for my experience, I don't like these kind of profiles because let's move on to the previous price action and you what say let's okay. So another thing that I like about is that you can basically select only, for example, Monday's gap, and you can use as a new week opening gap for your trading on regular trading now. So you can only Monday and show the last 5, for example. Okay. Okay. So this is the weekly opening for regular trading now. And when anticipate these kind of hard environments, look here. Look what do we have here. When we open inside of a previous Monday gap or a new week opening gap on regular trading, we have this chop or high risk environment here. You see, it's really clear. So we are basically trading above or below these gaps. And today we are going to have the same scenario. Okay, we are going to open inside of a previous new week opening up on regular trading on the previous. So you can anticipate price could move fast because we have the elections and many things going on right now. But for a technical standpoint or on my experience or my protocols, I'm very cautious about these kind of days. We are opening say next day inside of the previous gap. Yes. I don't know if
There's
it
so much sauce here, engineer. You're just dropping sauce left and right.
yes.
I think some people are definitely picking up on what you're saying though, because we have our AAP here. He's just got a light bulb moment right now. So he said, so the hierarchy for the gaps will be new quarter opening gap, new month opening gap, new week opening gap, new day opening gap, quarter, month, week,
Exactly.
day, and he's exactly right on the money. And
Exactly. That's the,
yep, as a small teaser, I could just tell you right now that wrap you're going to be looking at something pretty cool in your eyes pretty soon. So
yes, it's going to be really good. So basically, it's the same gap. If you think like this, it's exactly the same gap, but what gives relevance is the day that was formed, the timestamp. So quarter, monthly, new week, new day, and that's all basically. That. And it's like a um, if you consider high time frame gaps. I don't know about the 2023 mentorship, he was saying that you basically don't need a bias. You are considering only the new week's opening gaps as a draw on liquidity. But if you try to move a little bit higher and you are using monthly gaps to frame the weekly chart, then you have basically the ability to anticipate the weekly expansion because it will be drawn to a monthly gap or a monthly opening
that's so much
with a frame.
sauce. If you guys
Yes.
are not taking notes, like I don't know what. Yeah, it's literally cold brew.
So it's a really simple way to have a solid bias for your trading. You have the event horizon, the new month's opening gap, and you are leaving the event horizon next monthly gap. And now you are leaving the monthly gap, you are reaching the next portion of the range, the event horizon, or the lower portion of here, 75%, 25%. So you need only to read price, what is price doing during macros, what the structure of the current market condition is telling you, and where is the liquidity resting above or below those levels. So it's really simple, not hard at all. So
All right, Armando, let me
yes,
give you a 3-minute break for right now, or it's at 9:27 right now. So if you want to just prepare your charts just to even talk about the 9:30 opening gap, and you want to just leave the charts as is, that's fine too. I just want to be able to go through the chat right now and see if there's any outstanding questions that I could potentially answer for anybody. Um,
sure.
and again, this has been highly insightful, even for, it's even experienced traders. If they're in here, they would likely be lying to themselves if they said they didn't learn something new today. So funny thing is, the fractality of time, they could be the small gap all at the same time. Yeah. So Cobra, we're gonna talk about contract rollover on the next stream, because that's a whole sauce in itself. I kind of stopped the engineer from going into it today. I don't want to be a party pooper, but we could probably talk a lot about that as well. So
Yes, I mentioned a little bit about the new. This is a really another interesting gap that I did some studies about it, but basically, yes, it's relevant in my training. I consider it.
okay, well, if there's anybody that really doesn't have questions, I almost want to like not believe that. So it's like someone just ask some questions for a minute and a half until 9:30. And Armando, if you're all good for your charts and all that, we're just gonna basically look for the first 30 minutes, and then I gotta personally run because we got some cooking to do with Toodegrees. We dropping a lot of things in November. If you guys haven't noticed, our workloads have increased, our communities have increased, the amount of activity in our servers has increased. Our moderators are there to help you. We are very appreciative of all of our team, and it's been a remarkable journey just to see how this community's grown. I mean, literally, it was what, in April, our Discord had less than 500 people in there. So it's really really cool just to see our community growing. So the recording will be posted on YouTube, given that the quality is going to be all good. Hopefully the market makers didn't do anything to us. It's a joke. I'm not actually saying that happened. That's a joke for anybody that's not aware. So The Toodegrees
I
Livestream database, if you click that, it might say unknown at first, but once you click it, it should populate and you'll see that that's where all of our recordings have been. The cold brew cookouts, for people who have been asking, those are not recorded. I'm sorry. Once cold brew figures out how to do some OBS, 2 degrees, we got a request from cold brew. Is there a way to pre-print the RTH going into the open? That is something that Future Code also asked. So we'll see what we can do with that. It's a good suggestion.
So for example, now I have an alert that the RTH gap was filled on Dow. So basically, look the size of the gap right here. It was a really small gap here. And now we are trading inside of this balanced price range here. And we take this sell side. We have this stops resting here. Let's see what price does respecting. If we can go from here, kind of reach some kind of buy cycle. Okay, now let's compare the 3 assets here. Now note how we tap into the consequent encroachment into this Monday regular trading hours gap. We literally open inside of here. Now Nasdaq is moving higher. Remember the buy side liquidity, the relative.
That was a little loud to my ears. I don't know anyone else.
Sure. This is the manipulation level here on the Joshua stat map on the daily chart, daily level. That it's the I've been studying that. Yeah.
So yeah, this is something that I was talking with Cold Brew about, that you kind of see that's occurring is when you got that stacked 930 opening range and then they just more or less just send it. That's pretty much exactly what we are also talking. Look where it opened up to, like the CE of the previous RTH. So I think that's really important as well. The engineer basically called out that soup right there on YM, and you can see that it just touched the previous day gap. So this is you're gonna see it RTH as well. Like Cold Brew talks about this all the time. You guys can back test this a lot, but RTH specifically really needs to be forward tested, because you guys can be cognizant of what happens at 9:30, but being in the driver's seat and actually taking action based off of your own framework is another entirety on its own. And I just want people to understand that you might see specific moves, but you want to be able to really understand that being in those experiences is completely different than just saying, oh, here's the theory. So when you're seeing price move and take out market on close stops and then flip on a dime on the Dow, if you don't know what you're looking for, the same way that, again, the engineer is telling you that he wants to see those stops ran and then trade higher, then that's just going to catch somebody off guard. It's the same reason, again, we're looking at NQ. Look at how we're RTH CE pretty much is then closed above, and we open up and immediately start attacking RTH deviations. So
yes, and also I want you to know this. So we are trading inside of the 2 and 2.5 standard deviation, the projection of this gap. We are opening and we reach discount relative to this little gap here. We tap into this short-term low here, and now we are expanding higher. I was expecting this today, and now I can compare this gap. So by now, I know that Nasdaq is the strongest one. Why? It has reached the lower portion, the 25% of the gap. Nasdaq didn't. The gap was fully rebalanced on Dow. So for an intermarket analysis using gap theory, now you know that Nasdaq is going to be the strongest today. And just a few minutes of the opening. So This is sauce right now.
Absolute sauce. If anyone's not paying attention. And again, I kind of had the question to the engineer where I was asking him, I was like, okay, well, do you want to see that higher time frame gap on NQ basically stay open, or like the dirty work was there? If anyone can remember that question, he's like, no, I want to see those relative equal highs. And I was like, okay, well, that's interesting. Like, if we want to see the hierarchy, then we want to see that held. But he's like, listen, Josh, you got to understand the profile. And I was like, oh, interesting. That's definitely right on. Profile being that we're in a consolidation, we're going to be targeting stops.
Exactly.
So.
And this is based on the questions that I show you here above. It's basically, this is my complete questions that I did every day. Where we are relative to these gaps, where we are relative to the previous close, what the market close is, and what the overnight session. So with these questions, I can frame basically the profile and my bias for the day. Okay, so if I am looking for shorts in the long term, I am expecting, so for example, lower prices, and I'm not in a trending condition, I would like to see some kind of buy stops run before engaging those high time frame levels that I'm expecting. Yes.
Got a quick question in the chat regarding MOC. Like, for market on close, what time frame do you like to view that the most?
Okay, 15 minutes and 5 minutes.
Appreciate
both
it.
of those time frames.
Well, this has just been absolutely incredible. I don't know how else to say that. I always get amazed when I'm on call with you, engineer. You know? So
Thank you, brother. I appreciate that.
absolute beautiful calls today. Calling out the soup on the Dow right there. That takes some balls for anybody that doesn't understand that. So you gotta know what you're doing. Cold brew, don't make me get out of there. Oh goodness. All right. I'm just having fun, and hopefully you guys also realize this. There's 133 people in here. We appreciate every single one of you guys. If there's literally anything that we can talk about that could more or less help you, then we're here for you. But you guys are pretty much seeing the fruits of such hard work and dedication to the craft from people that actually want to better themselves and care about their progression. And it's just really, it's inspiring to also see it. And I just want to say that as well. So
yes, thank you. I appreciate that. The community is I really love the community, that because we have so many different perspectives of how we read price, and I think that one is better than the other. You find growth in using every way to read price, and not only the technical, for talking from the people that are behind the work, what makes amazing, because I truly know that all the people behind the team, all the guys that are inside of the community, are good people. So I love that.
and we appreciate you, Hermano. And I know that the community, again, really, really appreciates you as well. And again, it's just been an absolute pleasure today. I learned a lot. I learned about TradingView, learned about RTH, learned about hierarchies, I learned about what else? The overnight session liquidity, a couple of different updates that we've got proposed through that. So there's been a lot of good stuff from today. But yeah, the stacked opening range and closing range cold brew. If you slap that, I want to see a small execution if you can. Just small. You could DM it to me. You don't have to show off. I love you. Oh goodness. But this is This has been a very insightful day. So if there's any
Yes.
other questions, okay, that's what we didn't want to see. So I'm deleting that. Everybody loves you, Cold Brew. We know you. We love you. So so all right. For anybody that has any questions, you got time to ask it now. So please don't be shy. Ask a question. We're there to help you. So,
Yes.
and if you guys don't necessarily want to answer or have
Do
answers to any questions, then
do you engage the pre-market 9:30? Yes. Some days I am anticipating the walking the dog profile that you trade, and that's when I try to engage before opening. Yes.
Got a question over here. I'm wondering if you've ever used time-based standard deviation on the x-axis on the RTH chart. Supernova, are you talking specifically like the way that like Dexter's introduced it and a couple other traders, like through like manipulation legs? Is that what you're talking about? Country Girl says, at what point do you call it gap mitigated? So there's a teaching that ICT has, and a lot of people have more or less missed this teaching, but I can drop it in the chat a little bit later. I gotta just find it exactly. It's around like a 30-minute mark where ICT talks about the difference between a gap redelivery and a gap rebalance.
Yes.
And I think that would be very insightful for you to be watching, Country Girl. We appreciate you, Globex Greek. I got another question here from Athlete. He says, I'm starting my 930 case study, but can you show one example of high resistance market on close and low resistance market on close? So we did the high resistance on stream, so you can go back and watch that. Maybe it would be insightful to see a low resistance market on close, and what that would look like. But again, that might be something we share in like a general chat if it's a little bit more deep of a question. It's a really good question, but requires a little bit more studying. Second, like I just again saying this out of love, it doesn't matter what someone else has as a fill. Just please always be cognizant of your own decisions and your own actions. Engineer Casio question: do you find the time the gaps were formed to be more pertinent in terms of when they're revisited later in time? I don't necessarily know the direction of your question, but maybe he's asking is basically saying is that if there's a gap that has been left open longer, what are your thoughts about that? If you have any insight, engineer.
Yes. I think that I did a commentary when when you are, for example, on a trading market and you are not anticipating to come back gaps after you reach some kind of high time frame objectives. Like I did an example, 7-hour chart on breakaway gaps. So that's after we reach those high time frame gaps. I can anticipate now. This is what I call an exhaustion gap. But basically when price is not trending anymore. Like many regular trading hours, 1 week or two, and make a consolidation profile, and then one specific of those gaps has a balanced price range, create breakaway gap, and now the move continue again. So this is how I anticipate the gap is still open or not, basically.
Hopefully that answers your question, engineer Casio. Kale says, what if one asset hits a higher time frame gap? Do you take that into account for other gaps or focus on the one that you're mainly trading? So we just talked about that, specifically about the intermarket analysis as it relates to gap openings. But I believe his question stands to say is like, if there's a return to a gap and that you basically see one asset hit the gap versus another asset not hit the gap, basically a gap fill SMT. Yep. Which asset are you going to be more comfortable trading and or having a narrative of, and why? It's a really good question.
Okay, so yes, basically, I'm anticipating this kind of scenarios using with these gaps, and you can anticipate the formation of an S&T with the strength analysis that we made this chart. So, of course, I take in considerations if we other hits another high time, because, for example, on ES we don't have, sorry, on Nasdaq I did the commentary that above the marketplace on the 7 hour chart we don't have new months opening gaps above the marketplace. We have only new weeks of gaps, and we are trading basically highs in the assets. So you want to consider where are trading the other. You are going to ask same question I did here, but from the other assets, and you are going to compare these questions with the other assets. Where we are trading Nasdaq relative to time frame gap, where is ES trading relative to the high time frame? Where are we relative to the previous day close on Nasdaq, and where we are relative to the previous day close on ES and Dow? So you are using the same question, but on the 3 average, and you can anticipate these kind of scenarios. Okay, so yes, I don't know if that answered your question.
It's been highly insightful. Highly insightful. Has there been anyone else that has not asked a question? I know there's been some people that are very engaged in our conversation right now, and they've been asking multiple questions, but I would also like to see some questions from people that have not previously asked some questions, because that's a great opportunity for them to realize that they don't need to be shy. Nobody is judging anybody here. If your question is going to be able to be answered, it will.
Yes. Do you engage outside of Nasdaq? I basically trade Nasdaq, and when I started trading with gold, and then I moved on to Nasdaq, and I was not trading because I was learning to the 2022 mentorship with ES, basically what it was ICT was doing. But I find out that Nasdaq fits more my personality. But the last weeks has been not really clean, but that's fine. So I compare the assets, and I've been back testing Dow Jones, and I think really clean compared with the, and moves like Nasdaq very aggressively and sustain and move. Nasdaq has been ranging a lot.
So we got some other people participating now. Bullish MF, you're saying, how do you open TradingView? Love you to death, brother, but come on now. Have to watch several times. Definitely, I will be reviewing this as well. I hate hearing myself talk, but I gotta just listen to engineer. So just want to note one thing too. When you're looking at the 15-minute chart right now, like just notice how Dow is also taking its high right now, and they're now slowing down Nasdaq. Just be cognizant of that.
Yes. Yeah.
Yeah, just be cognizant of that. So now there's that speed up.
Yes.
And then you should really see that NQ will tag the buy side, and then engineer can get a bunch of love and hearts in the chat for calling out the level. If they want to edge the price just for the stream, that'll be fun, but that's not happening.
Great.
So
There are relationships.
There it is.
So no.
There it is. All right. Well, that's pretty much 2 for 2 on the call. Engineer calling out buy side on NQ, calling out the soup on the Dow. If anyone else has, I guess, questions or reservations, let them be known. But this man is a legend. and we haven't even hit a macro yet. So just
Yes.
narrative. So, it's been almost a 2-hour stream, which has been pretty insightful. So I think we're going to close it off if that's okay with everybody. I think that it's been, oh wow, Forge Futures with a very detailed notes. So Forge Futures, you're getting 200 XP, my brother. Thank you.
No, I appreciate it.
Thank you for taking notes. Thank you for paying attention. Thank you for being here, everybody. And again, if you guys enjoyed this, please just send some engineer some love in the chat. Engineer, if you can take a look at the chat, our community should be giving you a lot of love. And again, we just, I can't say it enough. A lot of people don't recognize how powerful RTH is, and they're just going to see with time. So that's what I'll say. So
I think that
a lot of love.
The community in the long term to consider more this chart. But yes, it's amazing to yes. I saw a question. This you take in consideration. This is something that I learned from another friend that is really good. Is do you take in consideration if electronic trading hours or price based? Okay, this is something that changed my perspective of price when we were in. It was a really short part of the video where ICT mentioned that if you have a high or low, basically from regular trading, and was tagged during overnight hours, you don't care. He said that I don't care. If an important key level hours and you don't care. So basically, if you have an important swing high or low and was taken during electronic trading hours, you don't take that too much in consideration. You want to see regular trading hours levels traded during regular trading hours. That's it. So it's a way to understand better what is the algorithm is going to refer an 30 to the previous day on regular trading hours, and we are going to hunt the overnight liquidity. Basically, yes.
Oh, Hermano, I promised you this last time. We're gonna be giving away one of your tools to a lucky winner in the audience. We gotta pump up the numbers though. We're at 127. So if you got a friend in the Discord, tell them to join in on the live stream right now. We need 20 more people to start the giveaway. So
Amazing.
Giving away one Dynamic RTH Gap Pro Plus for lifetime. We don't basically give you guys gifts to then take back. So this is your tool now that you guys are going to be able to have. So we got 126, 127, 128, 129. We got to get some more people in here, people. We got 20 more people. We got almost 4,000 people in the Discord. So come on now. Force Futures has gotten XP. I love that man a lot. He's gonna be getting some more love, but we appreciate him. 19 people. 18 people. Tag a friend in the general chat. Tag a friend. And if you guys also don't have a buddy in our escape chat, then grab a friend. Like that's really, really important. Like, you know? So it's really good to have someone around you. So all right, well, if we can't reach 150, I feel like that's a little bit embarrassing that I say that. So I don't know, but I'm still gonna be nice. So let's just do it now. 130. Tuning into this stream with the engineer. All right, good luck, everybody. It ends in 2 minutes. 2 minutes. And if you're not on stream while you have the winner, then you're not going to be able to get it. So
Yes. Beautiful, Nalivery.
and shout out to Keklik for setting up this giveaway bot. So appreciate him. It's only 37 entries. What's going on? All right, 48, 49. Okay, that looks a little bit better. Oh my goodness, you guys are killing the bot because there's too many people pressing at the same time. Oh my goodness. All right, now it's updating. We're at 65. Oh goodness. Oh my goodness. This is hilarious. You guys are too supportive. That's what happens. Our bots are more or less not able to handle it, I guess. So then I gotta ping TFO and be like, hey, listen, brother, I need help on giveaway bot. They are throttling us. It's not letting some people enter. Well, you got 44 seconds left to figure it out because 98 people entered, so. I love you guys. If it failed, it failed. I don't know what to say. I can only control what I can control. There's 111 people that entered. You got 20 seconds left. And now we have the 150 people on stream. So that's wonderful. So I'm going to go ahead and pause the OBS recording now.